Hi everyone, welcome to my US stock market portfolio review, January 2021. I'll be doing my UK one in a few days time, but I just had to refilm the intro because I did the classic thing of saying January 2020 instead of 2021. And yeah, this is where my monthly series that I do on my channel, I've done it for like the last kind of 3 years, I believe, where I just kind of go on and show my portfolio, try and talk about some of the positions, where I'm at with some of the positions, and yeah, everything useful like that. I think this video series is actually slowly becoming my favorite video series to do because I just enjoy looking at my portfolio, and like it's the first time I really sit down myself and like look at things, because I always get like a few questions on like the Discord that I run on the Patreon, and like people are like, oh, what's this position size and like what's this average, and I actually don't know. I hardly ever look at my portfolio. Like when I buy companies, I just like buy them and then I just generally don't hardly look at them. So yeah, I just kind of like, as a long-term investor, I don't really like check at all how my portfolio is really doing until this series that I do run on the channel. So yeah, it's a good one for me to actually check in how everything's doing. Sometimes like when I'm like looking at the numbers, I'm like, oh, I didn't actually realize that had moved up that much, or that stock had moved down so much. So yeah, it's interesting from my point of view as well to kind of see what's going on. So hopefully you guys enjoy it. Like I say, I think it's always good to do because then you guys can, like, obviously you guys that have been here for a very long time, even though there's some newer guys on the channel, you guys that have been here for like 100 years and watched me since I've been like 400 subs or anything like that, you guys have obviously seen the progress of like the positions, how I built them up, and companies that have been in here and been sold, and yeah, it just keeps up to date with it quite well, really. So yeah, we'll get stuck into it. So if you could smash the like button, that would be absolutely amazing. If you want to carry on tracking my portfolio going forward and you're new, make sure you subscribe and we'll take a look. So there's two portfolios. There's a Degiro portfolio, which has been going a little bit longer, and then there's a trading 2-1 portfolio that has like my ISA and Invest put together. I can't put my Degiro and trading 2 together, even though people have asked if I can just do it in one, just because there's sometimes some companies that link over and it's a nightmare trying to put averages, prices together and everything like that. So it has to stay as one, really, well, two portfolios at the moment. So I will see if there's some way around it that I can sort out, so it just all squeeze it into one, so it's a bit easier. But yeah, so we've got a Degiro portfolio and a trading 2 portfolio. So we'll start with the Degiro portfolio first, and like I say, I'll try spend hopefully like maybe a minute, 2 minutes on each position, and maybe some useful information, I guess, about it and where I'm at with everyone. I know some people like buy some companies that I talk about, and I think there's sometimes, you know, you want to know my opinions on it. So anyway, we're 2 minutes in and I'm still talking, so we'll get started. So we'll start with the Degiro one. Obviously there's the Alibaba position in there. That is the Alibaba position I bought over a year ago. Well, it might be somewhere around a year. I started it about a year ago. And yeah, that average is around about $180-ish or something, currently up 22%. When the stock did drop, I didn't buy into this position, I bought into a trading 2 position. But yeah, I mean, it's crazy because when you think about this position was up only like 3 months ago, nearly 70% or something like that. And then obviously China, it's just been like it's acting a bit like Boohoo at the moment, and it's just getting caught in the wrong headlines and it's gone down. And I'm very glad that I sold 50% of my position at them like quite highs, and yeah, it's been hurt quite a lot. But yeah, I mean, it just shows you how quickly a stock can go from being up so much to being down, and yeah, that's obviously something really important. Next up is the Carnival position. So I'm currently down 39% on this one. Some of you guys that have been here for a while know about this one. So Carnival is a stock that I started buying somewhere, I believe, in 2018. So I've had this stock for about 2 years and it was doing okay. I was collecting like a 4% dividend yield off it. The share price was doing okay. And then next thing you know, 2020, we've got COVID, and yeah, the stock price has been absolutely killed. But hey, you know, 2 years ago in 2018, I didn't know there was going to be a pandemic around the corner. Well, I say around the corner in 2 years' time, that would kill the share price. So yeah, I mean, from that point of view now, I'm just like, I'm willing, it will come back, I believe, in, you know, the next 2 years. And I think when it does recoup some of the losses, like I'll sell that out for break even, and then I'll move on. So yeah, I'm just kind of waiting for the recovery of that one. I just think I'll just take that break-even point on that one, and it will take a while to come round. It's another crazy thing to be thinking. At one point I was like nearly 70, 80 in the peak of COVID. I was like 80% down on that position. So yeah, it's scary, but hey, sometimes that's, you know, you're going to have a couple of, you know, stingers, but That's obviously one of them. Next up, Dropbox. So yeah, this one's up and down a little bit, still up 12%. I think this one could have a great 2021, so we'll see what happens there. I haven't got much more information about that one really that I can add in. Facebook up 55%. That's one that's been hurt a little bit over the last few weeks, but still a very big believer in that one, and I believe that in the next 2 years that one will join the 100% return club. I think it's all just short-term things with that one at the moment. Next up's my Gang position. So this is the portfolio that I buy Gang in quite heavy, and this is currently down 1%. And yeah, I was going to buy a bit more of it, but it's been on such a good run recently that I was like, I'll just kind of wait, because if I'm going to buy Gang, I want it to be like below like $18. So yeah, it's been on a good run, pretty much near my break even now, and yeah, we'll see how Gang does in the next few. Well, I can't think when online gambling gets allowed for this one. It's the game changer in like a lot of states, and that Michigan launch, and I think CoolBet was a good acquisition as well. So yeah, I'm liking Gang. It's definitely on the list of like, I expect to get like, I mean, it's a long-term hold, and I expect, even though I said I want to get 100% return from it, I would be disappointed if it's not more towards the 300% return in the next few years. So yeah, I expect big things from it. Next up, GWPH. This one's come down a little bit. This was up 30%, come down to about 8% up, and I think it's one of those that it just needs a few good quarters of showing how good it is at making revenue and profit, and then I think it'll attract some more buyers in. It will do really well. So I think that it should have a good 2021. And then here, one of the new positions, down 12% on that one. I think this, obviously you can see the big jump. If you watched the last episode that I did, you can see the big jump in the like pie increase that I've had buying this stock. So yeah, I'm going to keep trying to buy this one a little bit more. I really do like this one. I think under where it's at right now is just insanely cheaply valued, so we'll try and buy a few more of that. And then it's JD.com. So this one is up 306%. I bought this one very heavy, I believe, in 2018. There was a lot of negative, very much how it is right now, to be fair. There was a lot of negative news about China, especially the US reporting it. They were saying the economy is shrinking, the Chinese economy is dead, and it led so many Chinese stocks listed on the American exchange to like half the value. And I was like, wow, like I can get JD.com, like literally the Amazon version of the Chinese Amazon, for like half the price right now. And I was like, this is crazy. And yeah, I bought heavy. And since then I've sold off half my position. I've still got half of the position now. And I was like looking at this one the other day, and I was like, this is really good gains. I really love the company. And I was like, I'm a big fan of taking profit, but I look at JD.com and its future is insanely good for the next few years. And it has a lot more upside. And I was like, will I get this average again in this company? Probably not. And I was thinking, well, this company has so many years to still thrive, really. Why do I want to sell this company now? Like literally this company, I was thinking to myself, this company could actually be up something like 1,000% in 5 years' time. And that was like the thought where I was like, that's actually really, really good. So I was like, I can't sell it. And I was really thinking about something. I thought, I've took some nice profit over the last 2 years off this company, but the rest of it, just hold on to it, because it's just, no one's going to knock JD.com off the perch. It is coming, it's developed so much as a company as well. So yeah, I'm that's where I'm at with that one at the moment anyway. So yeah, and then we've got Microsoft, which was up 100%. It's come down a little bit, down to about 89%. And yeah, this is same as JD.com. My average on this one's about $100, and obviously Microsoft's nearly like $200 right now. And I'm like at the point once again, like, is this stock going to go back down to them prices? Probably not. And it's just, I've got a nice dividend yield on it. Let it run the long term, it'll do really well. And yeah, that's where I'm at with that one. And then same again with Pinterest. Up 172%. I lost where I were there. Pinterest up 172%. I mean, this three corners here have just done extremely well. Pinterest, same again. I'm not 100% sure. I was very tempted to sell a bit more out going forward, and I'm like, but am I going to get that average again? I don't know. So yeah, it's one that I'm thinking a lot about Pinterest at the moment. I'm like, how much is COVID going to play a part? Will it go down that low? Is it overvalued? I can't give that much information out because it's something that I'm still thinking about in here at the moment. So yeah, yeah, I mean, it's great. It's great. I mean, it's just great gains. We'll just enjoy the gains today because I don't want to talk about it too much because I'm still thinking about it myself. And then we've got Visa, 29%. I think this is one of the silent stocks that could do really well in 2020. I think when payment volume increases, like so many people are using cards right now, and when more money is being spent and goes back to being spent, like when people start going back out again, yeah, I think Visa could be one of the ones that does outperform the market that's been very overlooked at the moment. So yeah, I think that 30% that I'm up on Visa right now will probably go to above 50% in 2021. So we'll see what happens there. And then last one in this portfolio, Walt Disney, currently up 18% on this one. This is when I started buying when Disney Plus came out, and I was kind of like looking at Disney and I was like, I want to pull back, and the stock wasn't pulling back, and I was like, I'm just gonna have to buy it. And I hate buying at 52-week highs, and I did it. And I started buying Disney shares because I was like, I need to get involved in Disney Plus because it's going to be amazing. And then literally, I think when I started buying the shares, like 4 months later, COVID happens, theme park shut. Disney goes from being like $140 all the way down to like $80, and I'm like, stop buying at 52-week highs. But hey, you know, it's recovered pretty quick, to be fair, compared to something like a Carnival. It's currently up 18%, but when Walt Disney did have the COVID dip, you'll see in the next portfolio, that's when I was like, right, let's just buy this really heavy. And that's up a lot more now because I managed to get Disney where I wanted to get it as well. So yeah, and we'll move on to the Trading 212 portfolio. So we'll start at the top, the new shares of Alibaba. This is the new section of Alibaba that's just come in. You can see there is a decent chunk that I bought, currently up 4%. It has had a little bounce off the negative news, and we'll see where it goes with that one. I don't want to buy anymore unless it goes below where I bought, and that's where I'm at with that one. We've got Beyond Meats, so this one's down 7%, makes up a good position of my portfolio, as you can see. We'll talk about Tattoo Chef on the other side in a second when we get around to it, but Beyond Meats is one that is the potential to be a top 5 stock holding. So you can see that it is making a lot bigger. Because the thing is like you got Alibaba here, but when you add it to my other position in my Degiro portfolio, like you can see that it does make a big chunk up. And yeah, I mean, Beyond Meats could literally come into the top 5, that and Tattoo Chef. So we'll see, because I mean, that company for me, Beyond Meats, is a company that could 5x in the next 5 years. Like, that's how optimistic I am on it. So yeah, we'll see what happens there. Boeing, so you can see this took a decent chunk up. This is a lot of my money that I sold on Tesla, a lot of the money went into Boeing. I think that Boeing will do very well in the next few years. I think that Boeing will be heading back towards a $400 stock very soon. And yeah, I mean, that would leave me with about nearly a 400% return. So yeah, I mean, it's got a lot of potential to go up here, and that's not including the future dividends as well. So I mean, Boeing for me, that will be a stock that really does well in the portfolio, I think, in the next few years, and it's already doing well. You know, 54% in what, 7 months, maybe 8 months, still pretty good, isn't it? So yeah, and then Facebook, 46%. And yeah, I mean, it just adds into the other position that I had in my Degiro portfolio, really, I guess. We've got Callaway Golf. So this is one of the new positions that I've started building. I always like looking, and you can see like the new blood coming in, like the smaller positions that are pretty much flat, and then you can see the stocks that I've been having in the portfolio a lot longer. You can see them like how well they've done, and like obviously this is the thing when I show my portfolio, you never kind of like grasp like the profits that are being taken. It only shows up companies that have not been sold yet. So I mean, you can see like the stocks that are starting to get towards the end of the life in the portfolio that are up like hundreds of %. But you can see some of the new blood coming in and making what will be the future gains. And Callaway is that it only takes up a little small section down there. Currently down 1%. In my opinion, Callaway will be a stock that could bring in a lot of returns in the next few years. And that Callaway position there, I've only bought like 25% of the position that I want. Like, that will get to something like the size of Boeing potentially if the price is right. I want that to go below $22 or $20 will be perfect. So that's it. I did buy some Gang in here. I don't really know why, but that is up 10%. So yeah, I'm not even sure why I ever did that, to be fair. Like I said before, this is Glue Mobile. This is another new stock that's coming in. You can see that it takes up a small position. I have the potential to buy 3 times this position that I currently have in here. Down 9%. It's a new position. So I'm fine with that. It's actually the best way that I like it to work is when they go down, when I start buying, because then I get my average lower and gives me bigger returns. But yeah, Glue Mobile, it's getting closer to where I might increase. Under $9 is where I do want to get it, but by that I mean like $8.50. Like I want to get it a bit lower in that $8 range, and then hopefully below $8 for one more time would be amazing. So we'll see what happens. I don't want to buy just too soon yet. We'll see. And then obviously you got this big chunk here, which is in mode, which I believe in mode is my 3rd biggest position. I actually posted about this on the Discord the other day, about actually when I had them all together, like the position sizes. I think it goes Facebook, Microsoft, Visa, in mode, Visa, and Disney. I think that's how the position sizes do go in the portfolio. And yeah, makes up a big chunk. I'm very confident in the company, up 56%, and it's still dirt cheap. And for me, in mode for me could, well, I think it will reach the 100% return club next year. So yeah, we'll see how that one goes. But yeah, I am a big fan of that one. Then I've got some shares in MasterCard, up 11%. I just had a bit of spare money and I wanted to get my cash pile down, so I just bought some MasterCard. And I thought it's just better than it sitting in cash and getting like a 0.2 interest rate. And yeah, I've just bought it just to get some better returns off it than it being in cash. So that's one of the, if I ever need like money, one of the positions I would sell is MasterCard. Just because I don't think it'll ever go crazy. I just put it in there because it's better than getting a 0% interest on my money. So yeah, MasterCard for me is a good position. I'm happy to keep it there. If I need the money, then I might sell a position. If I see something more attractive, then I might sell that position and go get some. It's just there if I need it, really. And then I've got Microsoft, bought a bit more on the COVID dip. I didn't want to ruin my average in my other portfolio, so I bought it in trading 2 and 2 instead. Pinterest, got some more shares in here, up 234%, which is obviously amazing. And then we've got Skills, obviously changed from Flying Eagle acquisition, up 25%. If this stock goes down to about 10%, then I could double my position. I really like this company. I like the growth. I like the management. I like where they're going. There's no other company in this competitive esports space. Just you know, in like it. I mean, the closest thing is DraftKings, but even that's not anything like what Skills is. And I think that Skills could be like some sort of 10-bagger in the next few years. And yeah, I think it's got huge potential in it. And then there's on the other side, Last Tattoo Chef. So this stock was up like 50%. It's come down a little bit now to about 33%. While it's down here, I am actually very tempted to increase this position because I think when I look on this portfolio, even though I like Callaway and that, I think that over the next few years, Beyond Meat has a lot of potential to increase. And when I say increase, like up to like 10 times the return. And I think Gang has that potential. And I think Skills and Tattoo Chef have that potential. Like Glue Mobile will never be able to do what Tattoo Chef can do. And while it's down these valuations, I'm like, a bit like, don't be too ashamed for averaging up on a 33% gain when that could be 1,000 gain in 5 to 10 years time. And that's kind of a little thing that I'm thinking about right now. So I'm not 100% sure because obviously I've got a really nice position on like a $16 average right now, which is still really good. That's just something that I am considering that I might increase it a little bit, but not 100% decided on it. And then there's obviously Turtle Beach. I think this I actually missed. I didn't put it in on the last portfolio review. That's dropped quite a bit. I think that needs earnings because when I've been on Turtle Beach website, their sales have been like everything's been sold out. So I'm confident. I was going to say 100%, but I'm confident that they must have a blowout quarter because otherwise there's a supply issue. But if there's not a supply issue and the products are selling out how they're selling out, it should do really well, and the console cycle is just going to help it. And then we've got a few more shares in Visa. Same again with what I said in the Degiro account really for that one. And then the last one here, you get the Walt Disney dip that I'd bought heavy, Walt Disney, 62% up. You see the difference. You see buying in a dip to buying at highs. You know, compared to being, what was it, up like 15, 20% in the other portfolio, to now buying in on a dip. I get it 62% up because I get it on a better average. And yeah, I think Walt Disney will have an amazing year. The Investor Day was fantastic. And yeah, I think Disney Plus is just going to fly. So yeah, we'll see what happens with Disney. But I mean, there's a few, I would not like to pick which stock will go up 100% next in this list, because I could not decide between a few of them. There's a few very close to that could have a great year in my opinion. I think Walt Disney is up there. I think Beyond will have a good year. I don't know if it'll be a 100% year, but it will be a good year, I believe, when restaurants come back. Boeing could go there when travel comes back. I think Facebook maybe, if it gets past a lot of these issues. InMode could be up there in my opinion. I think Tattooed Chef could be there. I would even fancy Skills. If Skills can pull out some amazing quarters, I think that could be it. So, I mean, it's exciting. This is the most excited I've been about my portfolios going into a new year than that I've ever been, because I think there's some really true fantastic companies in here. And I think it could be a good year. So we'll see what happens. We never know. We never know. You know, we could totally fall down. You know, fall off a cliff. We never know. Something. We might have coronavirus part 2. Hopefully we won't. But hey, very happy with that. So hope you enjoyed me sharing my portfolio with you. It's probably the most detail I've ever gone into one. It's like 20 minutes long. Normally I only do it for like 10-15 minutes. So hopefully the additional information didn't bore you too much and you made it all the way to the end. If you could, smash the like button. If you're new, make sure to subscribe.